All right, everybody, buckle up because mortgage rates are acting like they had too much cold brew. Loan limits just jumped again, and 2026 is shaping up to be one of the strangest but most opportunistic markets we've seen in years. So if you want the data, the trends, and the actual strategy to crush your pipeline next year, you're in the right place. Hit that like button, subscribe, and let's jump into this wild roller coaster we call real estate. So let's start with the golden question. Where are mortgage rates now? As of December, the 30-year fixed is hovering around 6.375. The 15 years chilling around 5.75. Better than last year's chaos, but not as amazing as your most optimistic buyer had hoped for. So if you told buyers in 2023 they'd be excited about 6% rates, they'd probably have laughed at you. Here's what you should know. Rates aren't dropping instantly with Fed cuts, because mortgage rates actually follow the 10-year Treasury yield and mortgage-backed securities, not Jerome Powell's mood. So what really moves rates? Inflation reports, jobs data, global demand for U.S. bonds, and whatever the Treasury market decides to feel that day. So basically, mortgage rates are that one friend who says they're data-driven, but still make decisions based on vibes and feelings. So what's next? Experts are predicting and projecting mortgage rates to average around 6.3% in 2026. Yeah, so not the 4% everyone keeps manifesting on Instagram, but here's the opportunity. Stability brings confidence. Buyers don't need 4%. They just need predictability. Slight easing is expected. No dramatic crash is expected. More buyers enter as affordability improves slowly. So think of 2026 rates like your New Year's resolutions. They're getting better, just not by February. And now the spicy part. Loan limits for 2026 are out. These numbers matter more than most realtors realize. So, try to pay attention to this because this is where a lot of deals get saved. Conventional loan limit for 2026 is $832,750 as a baseline. FHA, you're talking $541,287 for a one-unit property. So about a 3.26% increase from 2025. This is basically the government saying, hey, home prices didn't really go down, so here's more room to borrow. And here's why you care. More buyers qualify without jumping into that jumbo category. More FHA buyers can now compete. More sellers can list their higher price points without choking their buyer pools. And this opens up doors literally and financially. So let's talk sales volume because this is where your closings live. 2025 was pretty slow. 2026 is supposed to be better, but not really a rager. Here's the forecast. Existing home sales are expected to hit 4.13 million units in 2026. That's up about 1.7% from 2025. So still below historic averages. But listen, movement's movement, right? And this isn't a fire hose. It's honestly just a steady faucet. But at least we got water coming out again. Now, what this means for you, more transactions are happening, slightly better inventory, and more buyers are starting to thaw out as rates stabilize. And I hate to say it, but 2026 is not going to feel like 2021. But it also won't feel like 2023's Hunger Games. So here's your full 2026 outlook in 5 seconds. Rates stable and slightly lower, loan limits higher, inventory loosening, buyer pool growing slowly, market finally calming down enough for strategy to matter again. Maybe that's a little bit longer than 5 seconds, but this is the year. Your skills matter more than the zip code, and the loudest agents are winning. The most informed ones will. And here are some tactics. Explain the loan limit jumps to your listing appointment clients. Use rate stability to pull renters off the fence. Frame affordability conversations around monthly payment, not rate. Payment's the most important thing. Also, prep sellers that more competition is coming as inventory rises, and leverage buyers who were beat out in 2021 to 2023 because they're ready again. 2026 is the year of educated buyers and strategic realtors. Not the hype, not the panic. It's all really strategy. So make sure you like, subscribe, and share this with another realtor who just needs a little kick in the business plan. And remember, stability isn't boring. It's profitable. See you on the next one.